Ryan, you are no stranger to IRA Club. You have been here a couple times before and are very well versed in the topic of self-directing. In fact, I always give kudos where kudos are due. You actually use this as part of your strategy when talking to investors, when talking to students. Ryan is going to talk a little bit about what's out there, but we also want to give a quick definition about, and Ryan, you could jump into this. I know it's on the screen, but what constitutes an accredited investor versus a non-accredited investor?
Look, we just want the ability to advertise. And because we advertise a specific deal, we have to only take accredited investors into that deal. So
Correct.
that's 200K filing single, 300K filing joint. That's your annual income. Or you have a $1 million in total assets, excluding your primary residence. Here's the fun thing, though, guy, that a lot of people don't realize.
Hmm.
If you are investing in your name and your name only, and you make $200,000 a year last 2 years and it reasonably expect to make this year, you can still uh, qualify. A lot of people don't realize that. The
Hmm.
other thing that I want you to realize too is if you have a defined contribution to your 401k, that counts towards your overall income. So a lot of people don't realize that you might be accredited and not even realize it.
Realize it. Hmm.
Exactly. So here's the thing though, if you're not accredited, we can't advertise the deal, and that's okay. We do some pocket listings that we don't publicly advertise. However, we need to have a conversation with you and establish a relationship. And those are the rules. So you can not qualify for anything on the screen that we were just talking about, but if you actually have a relationship and get to know me and get to know somebody on my team like Ted or Andrew, then you can actually invest in our non-accredited deals, and we can mark that in our CRM, in our database that, hey, you're not accredited, but, we've established a relationship and we can send you those pocket listings. So if you are non-accredited and you want to invest or do these types of things, look us up. There'll be an intake form that you can fill out throughout this presentation. You can get on our schedule a call with one of our team members, and then get that relationship status checked, and then we can start sending you opportunities.
Ryan, I'm going to keep my mouth shut. It is all you from this point on, sir. And again, I may pause you every once in a while to address a question. Thank you.
Yeah, you're welcome.
Thanks,
Yeah,
bud.
so yeah, I'll take it away. And I'm pretty good at answering questions and doing that. So if you do it during the presentation, I will try to answer it. So we're going to talk about self-storage. And so today we're going to talk about who and why people use self-storage. We're going to talk about our story and our strategy behind how we come to acquire and invest in the space. And then at the end, we'll talk about how to invest in storage. And so this investment income is truly passive income as defined by the IRS, David. So good question. This is passive income. So I like to ask the question. I know we said don't use the chat, use the Q&A, but if somebody wants to take a swing at, are Americans using more self-storage today than they were 40 years ago, or less today? What would you guess? Any guesses in the chat? I want to make this a little bit interactive. Are Americans using more self-storage or less self-storage in the chat? Well,
You could also, everybody give, I know that many, by the way, Ryan, many of our IRA Club members love to use the reaction button. So you
oh
could give
yeah,
a thumbs up. All right.
yeah,
So give
thumbs
a
up. There we
thumbs
go.
up. All right. If you guys agree or disagree.
All right, a lot more. Okay, you're right. So here's the actual data. Where in the 90s, Americans were using 2.5 feet per square foot or per person per capita on the average, and now that is soaring to above 6 square feet, actually in the 7 range square feet per capita. So if you're wondering, hey, all these self storages that are getting built, are they leasing up? They absolutely are. It's because we all use self storage. So are Americans using self storage? They are, and the reason why is because ever since the Industrial Revolution, we've started building lots and lots and lots of stuff, right? And then this guy came along and made it super easy to buy stuff. Point and click, it's at your door, sometimes within 2 hours, maybe within a day or so. The other thing that's happened with self-storage is the rising cost of housing. Housing is getting way more expensive and the spaces are getting smaller and smaller. And what's interesting is millennials are now our biggest customer. And it used to be baby boomers. And what's interesting about the rising cost of housing is baby boomers used to use self-storage, or they still do, for a lot of their heirlooms and their long-term possessions, maybe from their grandparents and things like that. Millennials don't want that, but here's the thing, millennials need extra space because their housing costs are so expensive. They're using self-storage differently for their equipment, for their gear, for their fun things that they do on the weekends. There's snow tires, there's skis and things like that because it's expensive to store stuff in space. So we've actually seen household utilization and self-storage continue to go up and up and up since 2013. Specifically, self-storage utilization right after the GFC was at 9%. Now it's up over 11% per household. So um, show of hands or thumbs up. Anybody use self-storage? Okay, I fall in that category.
Ryan,
So if
I
any
got 4 cages, buddy, 4 that are fully, they're all full. So
Nice. Nice. Yeah. So if you've used self-storage, you know, you're 1 in 9 Americans. 1 in 9 Americans uses a self-storage. And what I always like to ask too, did you use self-storage and you also have a garage or a big shed or somewhere else to put the stuff? Absolutely. So we find that 66% of our customers also have a garage. So this is this is not somebody, you see this stuff in cities, you see it in very rural markets where people just need more stuff. And the why is really interesting. Why do people use self-storage? And everybody usually says, well, Americans have too much stuff. And that's probably true. But Americans also, we move a lot. We downsize, we relocate. We have families spread all over the country. We have an aging baby boomer population that's turning over. We have major trends, major life trends that drive self storage. And so here's the 4 Ds of self storage, why people use it. Number one, people die. Number two, people get divorced. They move out, they relocate. Number three, they get displaced. They move. They decide that, hey, during a global pandemic, they need to get all their stuff out of their guest room so they can have a home office and a home gym. Maybe they decide to sell all their stuff or put it all in storage and buy an RV and move across the country, whatever it might be. That's what really contributes to it. And then downsizing. So which generation? I already gave away the answer here. So if you were paying attention at all, it's the millennial generation. Millennial and Gen X are the two generations that use self-storage the most right now. And the reason why is because those two generations are having life events. And life events are having kids, changing jobs, buying your first house, taking care of a aging parent. There's a lot of things going on in the millennial and Gen X life. That's basically ages 20, call it 30 to age 55, I think is those covers those two generations. Those are the people that are making the most moves. Baby boomers 5 years ago were our biggest demographic, but they're starting to get settled a little bit, right? They've moved down to Florida, they've got their place up north, they're kind of settled into their life. So that's 70% of why people use self-storage. The other 30%, business use. So this is sheet metal contractors, landscapers, people parking equipment, offices, businesses moving or downsizing. All those things are business use reasons why people use self storage. So why self storage? What are the how does it compare to say like multifamily, single family investing? Well, I think these are all tax advantage. Use your IRA club, what because self-directed IRA or whatever, you get the tax advantage that you would like multifamily and all the rest. You get depreciation and all these other things if you invest with taxable money. The average stay in our storage facility is about 32 months, which is pretty high. Now, multifamily, single family, it's pretty comparable. I mean, people are staying for usually at least over a year. And the economy is a scale, obviously, with it's really hard to scale single family and multifamily, but it's easy to have a lot of units under one roof for multifamily and self-storage investing. But here's where we just blow everybody away. Automation, rent recapture, and low maintenance. Now, automation, I'm going to talk about that. We have a fully automated properties. Don't even need a manager there to service a customer. You can pull up to a gate, book your unit on your phone, and move yourself in. Rent recapture, we don't have evictions in self storage. We have auctions. If you don't pay, after 30 days, your stuff gets auctioned off and we get our unit back. and we start to recapture the rent that was lost. And then low maintenance. We don't have toilets and carpet, appliances, water heaters, and all that stuff. So low maintenance really makes us stand apart. And that's why self storage has been one of the top performers for the past 40 years. When you look at even the credit distress quality right now, you can see delinquent on service loans. You can see that, once interest rates started to spike in the beginning of 2022 and the Fed started to do its thing and jack up interest rates, you can see it wreaked havoc on retail, lodging, office. Multifamily got kind of worse as the pandemic has progressed, or the interest rate hike has progressed. And you can see storage on the bottom in red. I mean, there's been hardly any distress in the market with self storage. It's been very resilient to some of the worst times and some of the biggest economic headwinds we've had. And when you look over the last 30 years, the Black Monday of 1987, the dot com bubble burst of 2000, the GFC of 2008, and the pandemic of 2020, you see that self storage occupancy in the gold bar has just stayed really consistent and strong. And that's why these REITs have formed. We have big players in the space, publicly traded companies that have come in and put this stuff everywhere. You guys have probably all seen the orange doors or the bright green doors or maybe the red box. Those are the three largest REITs. The other REITs are U-Haul, which everybody knows U-Haul, and then there's another REIT called NSA, which is National Storage Affiliates. Great time to buy REIT stock. I'm not in that space, but REITs are undervalued right now, and I think they're going to start moving the other direction really quickly as interest rates start to fall. So we actually do two very strategic things. We partner with these REITs and we have them operate some of our facilities. So where it makes sense, we actually white label our buildings with these national brands that give us an advantage. The other thing that we have is we have our own in-house property management brand that's more strategic to go into certain markets. Sometimes the REITs won't manage what we do. Sometimes it's more strategic to use our in-house team, and I'll talk about that in a little bit. But we actually partner with the REITs. So I know I gave my background already. That was me the first day I fell in love with flying. That's me after 10,000 hours with my wife on Orcas Island in the San Juans in Washington. And this is me. When I got hired at Delta, I just wanted to give just a quick investment journey. That's my mother on the day that I got hired there. Super exciting time for me. But I started investing in single family homes. That's where my background was. This is actually 4939 Farnhurst Road in Cleveland, Ohio. Or Farnhurst, Ohio, I think is what it technically is. Cuyahoga County. I had a dream as a pilot to basically buy single family homes in every layover, and it ended in like disappointment. And to be honest, it was a well occupied portfolio, but this property took me 6 months to find a replacement tenant in the dead of winter. My tenant moved out in October, and it took me till April to find a tenant, and scared the hell out of me because I was 2,000 miles away in Washington, and I had this empty house in the middle of Cleveland winter, and I was freaked out about that, right? Even though it was turnkey. And when the tenant moved out and the new tenant moved in, I had to make $2,500 in repairs because the city has C of O requirements, and I had to do all these repairs and fix the banister and all these other things, do the carpets, do the painting, try to attract a tenant. Just really difficult journey. And then when that tenant renewal came up, on my single family homes, it was always like, oh my God, should I raise the rent? How much should I raise the rent? And then I was freaked out because if you have a single family house that someone moves out of, you lose all your revenue and you're dead in the water. And those $2,500 in repairs was basically my annual profit, just wiped out just by turning over a tenant. Needless to say, I also didn't have the revenue for 6 months. So I got into single family investing and I thought it was going to be very passive, like with a turnkey, but it's been very difficult for me. And so that was kind of my journey to find self storage. At the same time I started investing, I had an apartment that looked kind of like this. And I thought self-storage, I'd heard about self-storage, but I was like, self-storage is stupid. I mean, it's like why would I ever use a self-storage facility? I'm just going to get rid of the things that I don't need. And then my wife and I got married and we had kids. And then our house looked like that. So you probably can relate to this. All the stuff, this is actually very organized. But all of the stuff that clutters your house and things like that, And then literally what we had to do is we had to renovate our home. And so when we renovate our home, what do we have to do with all of our stuff? We had to move it out. Where are we going to put all of our stuff? We don't have a big enough garage. We don't, we're kind of maxed out. So we moved all of our stuff into self storage. And I was kind of like, huh, this industry makes sense. Like, I'm a millennial, I'm having kids, I'm making moves in my life, and self storage is a very useful tool to do that. Also, when I moved out of my house, my smaller house with my wife, I had to completely clear out everything I had in my house, because my real estate agent says, "Hey, you got to pack everything up and get it all out of here so I can stage your house." Well, I hadn't bought my house yet; we hadn't closed, so I had to move all my stuff and put it in self storage. I've actually used self storage twice, and guess what? My renovation took longer than I thought, and selling my house and buying my new house also took a lot longer than I thought, and sifting through all the things that I needed to get out of that storage. So all of a sudden I was like, this is like a real industry that I've used myself and I think is worth investing in. So, and it's kind of like all the things that we pay for. The average price of a unit right now in America is $89 a month. And we all know we have like Netflix and Hulu and NFL Red Zone and all these things that we subscribe to, and you kind of forget about them, right? And just like a gym membership that's really hard to cancel, the reality is when you try to cancel your self-storage unit, this is what you face, right? You come to the unit, it's packed high with all your stuff and you're like, "What do I keep? What do I get rid of?" I mean, you're talking about a day of investing your time sorting through what you need. So even if I get hit with a rental increase of say $10 a month, is it really worth moving for $10 a month? Probably not. So when you have 500 units and you raise the rent $10 a month on everybody, now you've got an extra $5,000 of monthly income. Multiply that uh, by 12, you've got 60K of extra income. And the average cap rate right now in storage is trading at a 5.75% cap rate. So you divide that by 5.75, you just added $1 million worth of value to that property just by changing the rent. So I really saw an opportunity in this space, that it was resilient, that it was trending in the right direction, and people were using more and more of it. When I personally used it, I was totally bought in. So how we got started in storage, our first project was actually residential. This is in our nation's capital in Washington D.C. The house in the middle was a house that we bought. It was our first project. I was living on the left-hand side in the White House, and I bumped into this guy named Scott Lewis on the street who was in the military, and he moved into the house to the right of our first flip. And so we were like, "Hey, we're friends. This is fun. Let's start flipping houses and build a company." So we did that for a little while, and then we realized this is like, rentals and single family and all this construction, little projects. We're like, we need to find something that would be awesome, and self-storage came right to mind because we wanted something with the three E's. We wanted something easy to evict, easy to maintain, and easy to operate. And so I'm going to go into why each one of these matters. So, no tenants or no toilets, no leasing agents, no extensive amount of work that has to go into booking a customer. We don't have appliances in every unit. We don't have water heaters. We don't have evictions. We don't do evictions in storage, and I'll talk about that. And we don't have this big clustery mess when people move out. So let's get into the evict part. Easy to evict, and I got that in parentheses because we don't have evictions in storage. Blue state, red state, we operate in 14 states right now. They all have the same tenant landlord laws, and really it's called lien notices. So every single self-storage lease that you get is saying this right in the first paragraph. Stored property is subject to lien in favor of the owners. So when we go into the market, we know that we can we can have lien waivers, a lien against the property, or lien against the goods that get put in there. And if you don't pay us within 30 days, we can auction off your stuff. We actually file a lien notice. We put notices in the paper. We have a company that automates all that, and then we can sell your stuff. The money we make now, let's say you got a Ferrari in there, we sell it for 100 grand, and it's worth whatever you owe us, maybe $10,000 in back rent. Well, we'll take the $10,000 in back rent, and then all the profits go to the owner of the storage unit. And that's how it works. You don't actually make money on auctions. You just kind of recover your rent, which is great because you can get your unit back and start making money again within 30 days. The other thing that we like is easy to operate. And this is actually kind of like breaking news for Spartan. You see that kiosk? If you walk into one of our stores with that screen kiosk, someone will appear on the screen within 6 seconds. So we've actually designed all of our stores. When you open up the office and you walk in, there's a person on the screen talking to you. And they say, "Hey, welcome to Free Up Storage. How can I help you? Can I help you book a unit?" Right? And then on that those little iPads, those actually are there for the customer to key in their information. So we're one of only 3 operators in the country, in the world, that are using this technology. And that connects to our call center in our headquarters in Golden, Colorado. And that's how we automate properties. We also have a call center where you can also book online. Our gate software is all automated. If you don't pay within 3 days, you get automatically kicked out and locked out of our storage facilities. And then we like to cluster all of our properties in certain markets that are growing. And that way, a manager can kind of co-share multiple storage facilities with this kiosk system. But let's talk about the lease and what the lease says. Well, it says if the occupant fails to pay, we have the right to restrict access to the property. And usually within 5 days, we're gonna lock out your access, and that happens automatically with our revenue management system. So it's really cool. And we're not responsible for any damage. So if the roof caves in and all your stuff is destroyed, we sell tenant insurance, and I'll talk about that in a second. But we're not responsible for that. And then you can't make any alterations to the property, and there is nothing. We're literally selling you this. So this is a typical unit size, 5 by 5, 5 by 10, 10 by 10. This is the most common unit, and they're all the same. There's no alterations. It's corrugated steel and a concrete floor, right? We're literally selling air. That's a 10 by 15. This is a 10 by 20, and those are kind of the unit types. But Ramaz, do you have a question?
Yeah.
Yeah.
So Jeffrey asks, what are some of the determining factors to deciding on the market / location of your self-storage properties? Great
Yeah, I
question.
love it. I see the question there. I'm actually going to cover that a little bit later.
Okay.
Yeah, so I'll go ahead and cover that in just a second.
Be patient, Jeff.
So this is actually getting into our story, right? Because me and Scott built this company with the premise of where do you put these, right? So we first kind of established a team of over 150 self-storage professionals across 14 states, and we have $700 million of assets now. So we've been on the Inc. 500 now for the 5 years in a row, fastest growing companies, 126 fastest growing all, and that's our national brand, Free Up Storage. So to answer your question, Jeff, we invest where the population is going because we don't care about blue or red because we don't have to deal with that, right? So we don't have to deal with eviction laws like a typical. So we just look at where's the puck going. So if you look at all of our drop pins here, we're heavily invested right where the hurricane had its fun for the past couple of weeks. But we're in markets like Florida, Georgia, Tennessee, North and South Carolina, Arkansas, like Bentonville, um, Alabama, like Opelika by Auburn University. We're heavily involved in Texas. That's where our biggest footprint is. So we are in the states where the population growth is going because if there's more people going there, guess what? That means more storage demand. And it also means higher rental rates. And it means that it's in a rising tide economy where people are going to continue to move and transact and be there for work. Things are going to be built when houses get built. People use self storage. When people move there for new jobs, people use self storage. So we're also in a couple of strategic locations in Wisconsin, in the Madison area, right around colleges and universities. We're right by University of Wisconsin. We have one in Colorado, and then we have a nice presence in the Pacific Northwest. We actually have 5 in Washington. We have 3 existing, and then we have 2 more that are under development in Oak Harbor on Whidbey Island, and one up in Bellingham. And so we are growing in the Pacific Northwest and the Southeast because that is where the population growth is happening in our country. So a little bit about us. We're a veteran-owned business. Scott served in Iraqi freedom, military, Army guy. And so we're Vet 100 for past 5 years. And we do the whole thing. So we will actually build other people's self-storage facilities through our construction company. We build our own, and we buy existing and operate them on ourselves as well. So if you're wondering, like, how do you guys do your due diligence or what kind of things go into investigating a self-storage facility to include the financials and the physical site inspection, this is a QR code that will get you our due diligence checklist if you wanted that. And we have quite an extensive track record. So we have 16 deals that we've bought and sold and made a profit on, ranging from 12% a year to 83% a year on some of our investments. Now, talking about typical things that we do, how do we add value? So we buy this really nice Class A stuff and do a mark to market strategy, which basically means we buy in markets where the operator just isn't operating very well. So like that one on the left-hand corner there in Cumberland, a contractor sold that to us. He converted an old roller skating rink in the back to storage, built that three-story building and didn't really know what he was doing, sold us the property, and now we've optimized the rents to where as high as they can go. Kind of like that I was talking about, we're raising rents $10, $20, $30 a month per unit. That place has about 400 units. And so we can do a really good revenue management strategy. And the same thing for the other ones. We actually built the one on the right there just out of Seattle. We also buy the mom and pop class B, class C product, and then we bring it up a full letter grade. We pave the drive aisles, we paint the building, we make it light. That's how we add a lot of value to it. We also will build from the ground up. We probably do about 75% existing, 25% ground up. This is in Oregon. We bought this lot here. We got it fully entitled, built this Class A self-storage facility. Interior climate controlled units, exterior non-climate controlled units. People love the drive-up units, and they love the interior stuff that they can keep their stuff heated and cooled. And really, mold control is what the idea is. Then we give it to Free Up Storage. That's our national brand, and we lease up the property. So that's kind of some of the stuff that we've built from scratch. But really, I really want to make sure that you have one takeaway. How are we adding value to a box of air, right? Let's just say we're going to find properties where that unit's running for $30 a month, and we're going to come in and the market, and we're going to study the market. We're actually going to go facility by facility by facility, mystery shop, and see where the market's at for that same unit type. And we find markets where the occupancy is 100% full with a wait list, and everybody's charging more than our subject property. And usually our property is just as nice or even nicer than everybody else's. So it's just a mismanagement, so to speak, from the current owner. And we come in and we'll raise rent right away to $60 a month. Day two, we'll do rent increases. And sometimes people move out, right? Maybe 10% move out that you raise the rents on, but then somebody moves in because we've got good marketing strategy, right? Now you buy a property with 500 units and you pay for that property based on $30 a month, but then the next, within a year, you've got everybody paying 60. It's like you've doubled the unit count without even building anything in addition. So some really good value add strategies there. We also do fixing up the property. Left-hand side is a property we bought and sold in Colorado. Right-hand side, we do the landscaping, we do the fencing, we put in professional signage so people will want to come there and feel that their belongings are going to be well kept. Some of our curb appeal that we have here, we take over properties that are in rough shape. So like this, you walk into the office, we found one property that was like 12 cats living in it. It's just nuts, right? And people will just not want to transact there. So we'll take it and we'll make the offices look really nice like this. We'll hang the TVs with the cameras when you walk in. We'll upgrade the locks and the lighting system and just give a real nice refresh rebrand so that people feel like their stuff is well kept. This picture just shows you like our gates, our software, our security. You want to make people, our typical customer is a woman that's 70 years or older and doesn't want to be creeped out by going to your property, right? If you're in a big building, we're going to have a sound system so there's music playing and cutting through the dead air, right? We want to have a well-lit location with cameras and for the customer to feel like they're not going to get mugged there or their stuff, and most importantly, is not going to get stolen. And that's really what people want when they store their stuff. So I know, Jeff, you talked about markets a little bit. These are some of the markets that we're in. You can see we're focused around the Atlanta metro MSA, very fast growing market. You look north to the Tennessee-Georgia border, you can see that we're in the Chattanooga, Tennessee market, where population growth is going. You can see we're in and around Dallas, Fort Worth, Metroplex. A lot of population growing there. Those are all the properties that we have there. And so what we find is we look for properties that are really, really well located off main roads, 20,000 cars that drive by a day or greater. We want to have good access to the site, double lane highway, access direction from both ways, good visibility from the main road, because most people that book, half of them are going to be driving by your property every day and they live within 5 miles of your site. So we're going to do a demand study to make sure that we have the demand for our property. Then we like to cluster. We like to put our properties together so we can get the operational efficiencies of payroll, marketing, and all that stuff. That gives us the economies of scale to reduce expenses and continue to grow revenue. And that allows us to have better distributions for our investors. So that's really kind of how we focus on that. But getting back to my house, I talked about why I didn't like it or whatever, but that property, that single family home only has one source of revenue. And what I love about storage is it's not just renting storage units. You actually have five different ways you can make money, actually more than that, but five main ways. And the number one ancillary revenue for self storage outside of just renting units is tenant insurance. So when we take over these mom and pops, this is the craziest thing. A lot of them, let's say there's 1,000, we took over 1,000 unit property in North Carolina a few years ago. The mom and pop operator wasn't requiring any tenant insurance. And you could require that. And we sell a plan to our customers for $13 a month per unit. And we get to keep 70% of that money and we split 30% with the insurance company. And then we take that $9 that's left over and we split it with our investors 50-50. So if we take over a property that has 1,000 units, we get $9 of additional income per unit. It's $9,000 a month that we add to the property's value right away just for saying you have to have tenant insurance. And that's completely within our wheelhouse to do that. We can't require them to have ours, but we make it really easy to just sign here and it's part of the rental agreement. So tenant insurance is a huge benefit to self-storage. We also sell merchandise in boxes, things like that. You're not going to get super rich on this, but it's a convenience. Any excess land that you have, you can put on boat and RV storage. We rent trucks. We have cell phone towers. And by the time we do all the, fixing up, and I'll get to the questions here in just a minute, but by the time we do all the fixing up, we have to think about how are we going to exit? Who's going to buy these properties from us? And really, at Spartan, we kind of think of ourselves as like a medium-sized fish. We're not the biggest player in the space. We're the 36th largest self-storage operator in the country, but we're going to go buy mom and pops, and we're going to aggregate all those little tiny facilities into a nice portfolio so that these hungry guys and gals can come buy us, right? So, CubeSmart, Blackstone, all these big institutional shops are super hungry to buy portfolios of storage that have been aggregated, 200 million to 400 million dollars at a time. And so we've transacted with a handful of these institutional capital partners already in selling some of our projects as an exit strategy. We've also sold our properties one off. We've done mom and pop sales to people that live in the market that just want to own a property there. We've done a lot of 1031 buyers, things like that. I'll get to the QR code here in a second. We've tried to penetrate Arizona. There's a question about why not Arizona. And honestly, we just get our doors blown off every time we go in there. We just bid on a property down there. We put in an offer for $10 million and it got bid up. We were like really sharpening our pencils trying to get into the Phoenix market. And then somebody came in and bid $13 million. Like it's been very overvalued, I think for a little while. And just kind of how it works. So we would love to be in Arizona. We'd love to be in the Southwest. We just haven't penetrated that market yet. So case study, I wanted just to quickly end with how does this all come together and how do investors benefit, right? So if you have 50K you want to invest or 100K, this is a deal that we bought and sold. How did it all come together? So here's a property we paid $6 million for. If there's one number to remember, the $443,000 at NOI, that's how much profit there was when we bought the property. So when we bought it, we said, okay, take NOI divided by purchase price. That gives you that 7.38% cap rate. So we bought that property, came with, this was about April 19, came with a car wash, vacant land to build more storage units, which is another one of our value add strategies. And it also came with U-Haul truck rentals. And so here's a little quick video overview. Had 11 buildings. This is just south of Dallas. Had interior climate controlled units. It had the exterior units, but it had about 735 units, which is about the average size for us, about 80,000 square feet. And like I said, it had the heated and cooled units, but it also came with this car wash, which we ended up just selling for a great profit. We spun it off, we sold it, the investors benefited from it. But what we loved about this property the most is it had this ancillary income from U-Haul, but most importantly, it came with these 2 acres of expansion where we built 2 additional buildings and 240 additional units. So we actually added on these units with our construction company. We came out there, we built 240 units of additional storage that we filled up. And so that's really one way you can add value. But all in all, to do this deal, we partnered with investors, IRA club investors. There was cash investors, all kinds of investors, right? And we put together $2.3 million, 50K at a time. Then we went to a local bank and got a loan for 5.8 million. All in all, we had to put together $8.1 million to do that deal. And you're like, well, I thought you only paid 6 for it. Well, that's true. We paid 6 for it. We paid 1.6 to expand it. We put about 250K in reserves, and we put about 250K towards closing costs and fees and all that other stuff. So that's how we do it. That's where the money goes. And then we do all the work. So we did a 60-day due diligence period where we went through the checklist again. There's the QR code again if you wanted that for the due diligence checklist. And we go through, we check everything. We look through the rent rolls, what everybody's charging. We go through the P&L, which is basically like the P&L is popping the hood on the investment, looking through all the financials, looking through all the bank statements. A P&L will give you the trailing financial data on an investment. So this is kind of what a P&L looks like. We go through every expense, every bank account record, and then we send our team to the market and we mystery shop all of our competitors and we say, hey, how full is the market? There was 97% occupancy in that market. That's a good market. We mystery shopped everybody. But most importantly, what we found was, look, everybody else is charging more than we are, than our subject site. And here's an example of a 10 by 20. Everybody else is paying 155 a month, and our facility is only charging 135. Why? Because the current owner wasn't pushing his rents to the market. And we actually analyze every single unit type. This is like all the different unit types. But here we analyze all the unit types and we say, how much of a gap is there between what we're charging at the seller's property and where the market is? How much money could there be made up for when you do that calculation? And so here's just a quick way to do that. I don't want to like bore you with numbers, but this is a 5 by 10 unit where somebody's paying 67 people are paying $47 a month, right? And all these other units, same unit type, but they're all paying $23, $24, $26, $30, right? And you know what that is? It's the seller giving them a promotion and never raising the rents, right? So we come in and we say, hey, isn't it only fair that everybody pays what everybody else is paying, right? Which is $47. And then for that particular unit type, the market's charging 51. So we're still $4 cheaper per month than everybody else, and the market's 97% full. So when we add all that up, we say there's $165,000 a year in potential rental increases that are unplanned, right? So then we say, okay, we're going to raise the rents by $72,000 a year. We're going to give ourselves plenty of time. We don't want to be overly aggressive. We're only going to raise the rents by $72,000 over 18 months. And that adds about 6K a month in cash flow and about $1 million of value. Then we take that 2 acres, we get it all designed up, and we say, we can put 40,000 square feet here. But we know how this goes. Let's just plan to do 20,000 square feet. So that's 1.6 million, and that's going to add $2.34 million in value when you consider the new cash flow that's projected from that investment. Not a bad investment. 1.6 in for 2.34 out. That's pretty good. And then we do all the things we talked about. We improve the property, we increase collections, we do tenant insurance, we do depreciation, which I know you guys are all IRA investors, but if you do cash, we do the depreciation. This is a real K1 from that deal in the first year. An investor who put in 50K, they got a $21,000, $745 tax write-off. So there's usually losses in, the first year, bonus depreciation. That's a whole nother webinar. But what happened? If you put in 50K, this is the cash flow that you would have received in the investment, about 7 to 8% per year. And then when the property sold, you got a 55% return on top of that and all your money back. And the cool part is I know, doing it in an IRA is great because you shield the taxes. If you did it in your taxable account as well, it shielded all those taxable distributions for the first 5 years because you had the depreciation to carry through. So what happened? This is the last kind of finale here. We said that we were going to raise rent $72,000 a year. In that deal, we actually raised them 205. We started testing the tenants just to kind of see who would move out. We only had 10% of those that we raised rents on move out. So we said, screw it. We raised the rents on everybody, got 205K additional income. Then with the expansion, we said, hey, we're gonna build 20,000 square feet. We actually the contractor got out there. He said, dude, it's gonna be way more economical to just build 40,000 square feet. So we did that. Same budget. So we added 300K a year in income for that. And then we took the existing NOI we had in place, added it all up. So we told investors, hey, we're gonna buy this for 6 million, put a couple $1 million into it, sell it for 10. But we ended up actually selling it for 14.4 million. So we sold that investment for $4 million more than we projected. So that's kind of how that came up. So what the heck are we seeing in today's market? So we have a deal in Port Wentworth, Georgia, where we actually are building a ground up development. Now, in today's market, there's markets out there where the rents are really high for storage. And what we're finding is it's actually cheaper for us to build than to buy because the rents are so high. Buying that property, you'd have to pay for that NOI and that income. So if we actually build from the ground up with our in-house team, we actually end up doing a lot better. So this is in Port Wentworth, Georgia. This is one of the fastest growing cities in the state of Georgia, and it's right by Savannah. So it's by the Deepwater Port. It's the fourth largest port in the country. And there's a lot of population growth coming to this market. That's why we've selected this deal. So these are just some deals that we're looking at now. We're buying another property in Chattanooga, Tennessee. And this one is a cash flow deal. We like it because it has in-place cash flow. And we also like it because we have 4 other properties in that market. So we have a good economies of scale for this facility. But, Ramaz, I wanted to make sure we had time for questions. But if you wanted that due diligence checklist or anything like that, I put the QR code back on the screen so people had a chance to do that. If you wanted to email me, I put my email on the screen. If you have any questions about self-storage, we're not just a place where you can passively invest. We actually will help you build your own property. So if you have acreage and you want to build your own or you want to partner that way, we actually have a construction company. We build about $100 million a year in new product for lots of different operators and folks. So, use this as a resource. If you have a question about self-storage, we'd be happy to answer it.
All right, Ryan, because I know we only got like 6, 7 minutes and you
Yeah.
have another podcast at the top of the hour and I want to be respectful of people's time. Somebody in the private chat says, I quite do not have 50,000 inside my retirement account. Do you accept anything less than 50,000?
Just use the QR code, get on a call, and we'll work. We always work with IRA club members on everything.
Okay.
So,
You
yeah.
heard that. You heard that from him. I know it came to me the private, and I apologize if I said that out loud. If that was okay with you, she just gave me the thumbs up. All right.
Yes.
There's a couple more questions that popped up. But one thing I do want to tell you a strategy is yes, Ryan was talking about personal dollars, and I know we're here talking about retirement dollars, but when I talk to you guys, diversify both sides is what I'm saying. Not just your personal dollars, but also your retirement dollars. Not everything should be inside one spot or one nest egg. Ryan, you could answer those 3 questions, but I'm
Yeah.
gonna take the screen and then go ahead, knock it out.
Yeah. So we have a track record. Like I said, the deal that I showed on the screen isn't necessarily the best deal we've done. We've done a lot better than that. I know that someone said it doesn't seem typical. Our typical projected returns are 15 to 20% annually. The deal that I showed produced a 44% annual return. to investors. So it did a lot better. We've seen as high as 66% annualized returns. But look, we do a really good job in developing self storage and buying value at existing. Typically, our returns are going to project between 15 and 25% per year. 15% is going to be your really stabilized cash flow, low break even occupancy, kind of a steady eddy property. And then the 25% annually is going to be stuff like ground up development, right? Where you're taking on a little bit more risk, but there's also a lot more future potential upside. That's, I think I answered everything in the chat.
When you go to Investors Row, there's their website. Okay. You could share this, bookmark it, view another webinar. There are videos on the bottom that explain, and I'm sorry, gather a little bit more information.
Thanks for having me, and look forward to getting to know folks on the call.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.